Alright, good morning. Let's go over today's trade plan. So in Friday's recap video, we talked about some of the warning signs that we saw on Friday, primarily with NQ and TF not holding their breakouts and ES being a neutral day. So, that kind of pullback on Friday afternoon essentially invalidated the intraday breakout that we saw, and that in itself was a bit of a warning sign. But of course, that doesn't mean that I was expecting a large gap lower. The key support underneath was still 47 to 49, and a break below that would put sellers in control. So that's what we saw in Sunday's overnight session. The overnight high is 47, so that 47 to 49 key area was rejected, and that put sellers in control. Ended up liquidating all the way down to the 35 quarter, 37 quarter support, where responsive buyers stepped in and pushed it back up to the 41 to 43 high volume node, which is the heavy volume area within the current short-term balance. So at this point, heading into the day, we know that short-term sellers are in control, and for that reason, we are going to focus more on the short side rather than the long side. We're going to be cautious on any long setups, and the support zones are going to be used as targets on shorts rather than entry points on long trades. Now, this is a news-driven move, and right now the catalyst is any news out of Ukraine. So this can expand the volatility. So we can get some, just some volatility expansion, some wider ranges, and we have to keep in mind that we've already had a pretty decent sized move in the overnight session. So we could get a little bit of balance, continued balance, and then we get a directional push. We also have several econ reports out this morning, with the ISM Manufacturing Index at 9 a.m. Central being the main catalyst on the economic calendar. So overall, as far as the ideas on the day, we can still technically balance around this 41 to 43 until we get the next wave of some directional conviction. But 41 to 43 can also be the start of the next move. This can be the area that we reject and then head lower. Now, on the downside, a break below 35 to 37 would be a break below the overnight balance. That's where the S&P has been ranging overnight. So a break below 35 to 37 could result in another liquidation type move. And even though we have support at 29 quarter, 31 quarter, that may just end up being a area where the market pauses before it continues a bit lower. So, the market does not have to stop at 29 quarter, 31 quarter if it starts liquidating below 35 to 37. So, ideally, we're short into it, and we can use 29 quarter, 31 quarter as a target and take profit there on short setups, but I think that it's risky stepping in front of a move like that and expecting to get a really high reward to risk trade out of it. I think that if we break the overnight balance, then we're probably going to go through the bottom of the short-term balance area, 29s, and probably head down towards 25 half and potentially some of the lower support zones, 1975 to 2175. Even 17 half would not be out of the question if we start getting a strong liquidation move. So, on the downside, a break below 35, 37, we are not looking to fade that move. We're going to go with the direction, and if we take any fade setups, which would be long setups below 35 or 37, then they have to be at range extremes where the reward to risk is justified. So that would have to be 1975 to 2175 potentially, or 17 half, or if we really got extended into the 11 half to 14 half, then perhaps that's an area where we can consider an intraday long setup. But aside from that, the focus is going to be more on the short side. 41 to 43, as I mentioned, is a HVN high volume node within the current balance, so we can still get some continued chop around here. On the upside, I expect sellers to be active at the resistance zones. The first resistance zone we have is 46.75 to 48.75. Now that is right above the overnight highs. So we do want to see a relatively quick rejection of that zone if the zone's going to work. Um, Otherwise, we could go even up to 51, 53, and it would still be a short. So, the further away you go from 41 to 43 to the upside, the better the reward to risk gets on shorting the market. And, that's something that we will have to, of course, time in real time. But right now, the way I'm viewing the market, I will look for short setups on any pops into resistance. So 46.75 to 48.75 is a potential short. Even the 41 to 43 area could be the start of a down move. So even that is a potential area to short. It's just that there could be some more chop around here, so it's not going to be the cleanest setup. It requires a little bit more of a real-time read in order to take the trade, and a little bit more trade management on 41 to 43. And that's why I think the quicker rejections I think are probably going to be a bit higher, especially in the first 30 minutes when we still have that pending econ report. Above that initial resistance zone, 51 to 53 is a good spot to look for a short setup, and finally 55.75 to 57.75 if we even get up there. Given the overnight weakness, I personally don't think that we're going to go all the way back up to 55.75 to 57.75 and test the prior VPOC. At this point in time, based on the wide gap lower and the weakness that we're seeing in the market, I don't think we're going to go all the way back up there. Now, because it's a news-driven move, if some development comes out where the reason for the move no longer exists, that would be a different story. But for now, we have to go based on what we're seeing, and right now we're seeing a lot of weakness in this market, going all the way back down towards the bottom of this balance. So, for now, my view is I don't think we're going to pop all the way back up. Typically wide gaps such as this one don't get filled the same day. Usually when you have a wide gap, you might bounce a little bit early in the session, but then, you end up making new lows on the day. So that's the pattern that I'm expecting, and that's the one that's high odds and high reward to risk. So any pops into resistance are potential shorts, and if you're shorting initial resistance or some of the upper resistance zones, then you're targeting a move back down to 41 to 43, down to 35 to 37, and potentially lower. So it could be a very good trade. It'll just depend on whether the high volume continues into the day session, which so far as we can tell, it should. Anyone who basically bought the breakout on Friday and held it is now underwater, and that can result in some liquidation even right off the open. So right now it's just better to focus more on short setups and just be more cautious on long setups. Even if you're going to take it, be a bit more careful, be extra selective. So those are really the main ideas on the day. Let's see how well the S&P holds up off the open. Let's see if sellers step in right off the open, and we'll take it from there.